All right, thanks for popping in this month. Fall's here and football's in the air, which I love, but we also have a lot of smoke in the air. I know we're all hoping that's going to clear out very soon. This month, we're going to take a look at the Beacon Appraisal Report as always, but we'll look at Bend and Redmond. We'll compare the two. The first one we'll pull up is the median home price in Bend. It actually dropped to $706,000 for the month of August. This was after our yearly high in June of $775,000. We'll immediately switch over and take a look at Redmond and their median home price. It also declined a little bit to $495,000 for the month of August. They were sort of holding steady there for quite a few months for most of the year, but they've seen a recent decrease there. All right, next we'll look at the number of sales, and I'm not really surprised here. This number sort of flatlined in Bend. We had 148 in the month of August. If you kind of look back of August of last year, there was 156, so not a huge discrepancy there. A little bit of a similar path that we're on right now. And same thing as we jump over to Redmond and look at their number of sales. They dropped to 56 for the month of August. Again, Redmond is a much smaller city, always has fewer sales than Bend, but they had a pretty healthy spike there in July at 88. So interesting to see that drop down to 56. And then next, we'll look at the days on market for both Bend and Redmond. Starting with Bend, sitting at 25. And remember, this is the median days on market. When I pull the MLS data for the average, currently the average days on market for active listings is 75 days. So homes are certainly not moving quickly in this current environment. Jumping over to Redmond, their median days on market is sitting at 31. A little bit of an increase over the last few months from that low in May of 13 days. And then I'm going to pull up one more chart here. We'll just look at Bend for argument's sake, but this is the months of inventory. So there's currently 4 months of inventory according to the Beacon Appraisal Report, and it has sort of stayed the same as it did last month, but this is the highest level of inventory that we have seen in quite a long time. And again, it goes back to everything we just looked at of those charts of number of sales. Simply not as many homes are selling as what we've seen in the past, so that inventory level is staying higher, which is great for buyers. It's not so great for sellers. All right, the last Beacon Appraisal Report chart I'm going to pull up is this chart here that shows the conventional and cash transaction comparison. So you can see in August we had 39 cash deals compared to 96 that were conventional financing, which honestly is not that bad considering the current environment of the rates, which is what we'll jump into right now. All right, so a 6.5% interest rate historically is low, but we have historically high prices as well. So it's making a huge affordability gap. And in fact, a recent analyst for Realtor.com found that 86% of current homeowners have a mortgage rate that's below 6%. So because of this, it's really caused these people to sit on the sideline when maybe they would have normally already listed their house. But it's hard to swallow going from a 3 or 4% interest rate up to a 6.5%. And as we all know, we've been holding these rates up because inflation has been stubborn. The Fed has had this target 2% for a very long time. Well, the current US inflation rate is about 2.9%. This is the lowest that we've seen since March of 2021. So we are making progress on inflation, and we are starting to see signs of a cooling economy. And that is exactly why this month in September, I think it's September 18th, the Fed is getting together, and there is much speculation and belief that they're going to lower the Fed rate. But there's no guarantee that they're going to do this, nor is there a guarantee that there'll be an immediate effect on the housing market. A lot of lenders already have sort of baked in some of these rates, which is why for the recent weeks we've been seeing a steady decrease in mortgage rates. So it will be fascinating to see when they meet, if they actually lower that rate, and by how much. So I've said it before, as a seller in this market, you do have to have realistic expectations about your price and realistic expectations about how long it's going to take to sell your house. As a buyer, this could be a great time for you to be ready. Wait for the house that you really love to come on the market. As we just said, interest rates may come down, which is going to play into your favor, and inventory is up. This gives you more options and more time to choose the house that you're really excited about. So we'll all be waiting to see what happens next week after the Fed meets. In the meantime, thank you so much for tuning in to watch this month. And if you ever have any questions, please don't hesitate to reach out. I'll see you next time.